Hello, hello, hello. Hello, everyone. Hello, everyone. Welcome. Hello, hello, hello. Good afternoon, good morning, good evening, wherever you are. I hope you're doing well. I hope you're doing good.
Good afternoon.
Good afternoon. What a surprise today. What a surprise today. Let's give some moments for others to come as well.
Okay.
I've got my screen up. You can see my screen, and let's bring up TradingView, and let's have a look on Bitcoin. And I'm sure that everyone may have questions or wondering what's going on, what's going to happen. I hope you're not upset, to be honest. And I also hoping that you are not surprised on the other hand as well. Let me know, are you surprised or are you upset? Healthy
Fully,
flash. Okay, that's a very nice positive way of seeing it. It is
yeah,
true. We need to flash, and I'll explain why it needs to flash. Hello, everyone. Welcome to these new AMAs. I'm going to do 4 of them, right? And that will be a good opportunity for me to present them here. Right, I'm going to do 4 of them. Let me do this full screen so you can see it. Here we are. So I'm going to be here with you every Monday and Wednesday, GMT plus 2, right? Which is going to be uh, 2:30, which is now. This is the time. And we're going to be here together for 2 hours. I'm trying to I'm going to try really hard. I promise you, I'm going to really try hard to stay only for 2 hours. It doesn't usually, I don't usually stay here for 2 hours. I usually stay like 4 hours. But I promise you that I'm trying my best. So yeah, I'm going to be here Monday and Wednesdays when we have the US Open right now. And Tuesdays and Thursdays, I'm going to do a little bit early in the morning so we can catch the EU, right? So this is on GM2 plus 2 time zone. When I get access to events, because I'm still new into the war room, so I don't have full access yet from the administrators. When I get full access on the events, I will do a countdown, right? Which is going to be a universal countdown. So whoever's watching that event will have, a clear picture when, it's going to start. It's going to be working on any time zone. It's like a countdown. Right. Enough of that. Let me close this down. Let's go back to Bitcoin. Now, Bitcoin, a bit silly for us to think that, it's going to go always go up and up and up and up without a retracement. And I know that I'm just landed into the war room, but into the crypto school, I was keep on saying this that, when Bitcoin started move last year for the 15K area, and even measured on each little waves. So we have one wave up, came down, that was 50%. Then second wave up and retraced again was 50%. And then it went to equal highs, right? Local high was the same thing. Then came back to equal lows and then pushed one more time. And it hasn't retraced since then. So seriously, with Bitcoin, the best retracement that we had was only 50%, right? So we haven't got any decent pullback yet from Bitcoin. And it's like, a matter of time when, it's going to retrace, when it's going to retrace. Now, on last week's show with Carl, I did give out that when we're going to, when we get into these levels, we're going to see a small pause, right? And why is that? Because if you go looking to the left, and especially on the weekly, let me change that to the weekly, it's more clear. You can see, let me move that out of the way. You can see this candle here, right? It's like a pin bar, right? It's got a small body in the middle, and you've got wick above and wick below, right? This is the inside pin bar. So I mark them as order blocks because there are order blocks, right? Why they're order blocks? Because it's a mass of orders that happen on the same time, on the same place as price level. They decided to short it down. So it was coming down this way, right? And then it pushed all the way up and then it started pushing down. So something happened here major that changed that course, right? From that up move, which is a small rally, start going down. So we call them order block. Order block is a block of orders, right? Mass of orders that happen at the same time. And I did point out that, since we're going to get into these areas, we're going to see some rejection, right? I said that before the weekend. Was it Thursday? Was it Thursday or Friday? I don't remember correctly. But, why is that? Because there's a lot, like how many days? It's not days, it's weeks. It's 1, 2, 3, 4, 5, 6, 7, 8, 9. More than 10, like straight 10 weeks, we have got red candles. So it's like a huge sell-off. So it does make sense that when it's going to come approaching these areas, we're going to get affected, right? So if we take the nice round number and say that 70% of these orders were executed right on time, right? The exchange had enough time to find, when you're trying to sell, and the exchange needs to find someone that is willing to buy, to exchange the position, the buyer from the seller and the seller to the buyer, right? So let's say that 70% got fulfilled. We've got the remaining 30%. When it's going to happen? It's going to happen when that price level is going to reach again the same areas. So the exchange will say, oh, you know what? We've got some remaining orders here, right? We need to execute them. So the remaining 30% from these orders are getting executed here. So if you understand about order blocks and supply demand, right, then you understand that you're going to find a resistance here, right? So this little flash here, that little red candle, is a little bit fair. I mean, we're going up for the past 8 weeks, right? We must see somewhere a small retracement. So it's been like 8 weeks. So far, we shouldn't be panicking. And let's measure this. But how much did it go down by? It went down by 8.28%, 8%, let's say, right? Let's measure these. Remember that I said that the maximum retracement that it did was 50%. How much was that? 20%. Did we panic back then? No, we didn't, right? The second time, equal highs, equal lows, same percentage, right? 21%. What about that one there? That started from here and went all the way down here, again, around 22, 23%, right? Did we panic back then? No, we didn't panic, right? Why shall we panic here now? We don't need to panic, right? We need a flash. Also, approaching these levels, forget about the order block. An order block is an explanation, not just an explanation what happened, but also we can understand that once we reach this level, a lot of people, let's say they got all pumped up and hyped up and said, okay, we've got some more people in the waiting room. Let's add them in. Also, I should remove the waiting room. We don't need a waiting room. You should be able to come in straight away without waiting room. I'll make sure I'll take the waiting room away. So, yeah. So a lot of people, what happened is they pumped up and they thought that was going to go up into the 50K area, right? So we had loads and loads of high leverage positions here. And there was a lot of liquidity was building up here, right? So long positions, it means when you are consolidating, you're trying to build a position here, and where are your stop losses? Just under your previous low, right? So we had loads of positions with a lot of liquidity sitting down here. And what happened with the flash market? It just went under below the stop losses. And all the long positions got liquidated, right? And you can check that on your own. Let me check here if I can find it for you. I'm sure that this is not new to you, right? If you go to Going Class and go to liquidations, you can see what's going on for the past, let's say, 12 hours. 350 million got liquidated, right? The past 4 hours, nothing much because it's the aftermath, right? Just 4 hours ago, only 70 million got liquidated. But look what happened 12 hours ago, or even 24 hours ago. It's like 389, almost 400 million, right? Very close to half a billion. There's also a heat map here, so let's have a look. It's not as great, the one that Carl shares with us. But you could see here what we're consolidating. You can see, what's going on here, right? Look at that. There's a lot of liquidity was building up. The longer they stayed in consolidation, you can see that people start building positions, right? It was very dark here, and it's getting lighter and lighter and towards yellowish. And that was like the peak. What happened here, there was a lot of liquidity. There was a lot of stop losses. And the market makers, they decided to go further down. Now, you see there's a lot of liquidity sitting above as well, right? It's the same thing. Nothing back here, and then it start building up slowly, and then it become yellow. So now we know that we've got a lot of stop losses here as well, up there as well. So what is this? This is like people that want to go short, and this is the stop losses of the shorts, right? And that was the stop loss for the longs. And the market makers, it's very easy for them to decide and say, okay, which ways shall we go? We shall go in a way that we need to pay less money out to the traders, right? So they're looking out and saying, listen, how many millions we got here? 173, 27 here, 173 there, 180 over there. What about here below? 224, right? 184. So they have to pay more to the people that they have a successful long trade, right? I say, okay, in that case, let's do the opposite. So they went down, right? And obviously, it happens to react as well onto that order block, right? Every time it touched that area, it went down. Try it one more time, push it down. Then a lot of people got hyped up and said, no, it's all right, I'm going to break this. And we go long, and they decide to go long, and they put here all the stop losses, right? Liquidity. And the market makers just grab liquidity. They love liquidity. Now, market makers are not bad people. 80%, right? Roughly now, rough numbers. 80% is computers, right? It's the algo that runs the space. 20% is the people, real market makers, like actually people that they're picking up phones and they talk to other market makers and they're looking at the systems and say, they're trying to decide what they're going to do and direct the brokers and stuff like that. So, 20% is being driven by people. You've got the institutions, you've got the banks. Well, banks that don't spend a lot of time in crypto, they have other markets that they deal with. And the whales. Well, the whales are not market makers, but they can affect the markets, right? Anyway, this is a little bit, let's say, not advanced, but let's say people can understand these or they can see these because they know a little bit about the markets. What about for the people that they still don't have a clear picture and they need a little bit more of assistance? So let's bring out the indicators. This is the daily, right? I can use a weekly, it's no problem, but let's start with a daily. Back here, what do we have with stochastic RSI? We've got a cross down. What a cross down does it mean? It means that we need to be careful, right? We need to pay attention. When it's going up, it's good. It's telling you that a lot of people are buying, buying, and keep on buying, right? It's good. It's pushing up. When you go to the flat, goes to 100, do we panic? No, we don't panic. We don't care. It means that, it goes on full power, right? Full volatility. It just cannot go higher than 100. We start paying attention when we got it crossed down. I said, okay, we got it crossed down. When did that happen? That happened Tuesday was flat. Wednesday, the 6th, we had the first warning, right? Go below and have a look on the RSI. What the RSI is telling me. It's telling me that it lost the peak, right? It was going up and then it was turning down. Trying to push a little bit, but it was a little high, pushed down. Trying one third time, and it keep on giving you low highs and low highs and low highs. So if I'm watching the indicators on the daily, I shouldn't really be really surprised, wouldn't I? Forget about the order blocks, forget about the institution, forget about the market makers, forget about current glass that we see the liquidity pools and stuff like that. You know nothing about that. Let's pretend that you know nothing about that. You have the old indicators here. You got the stochastic RSI on the daily telling you we are crossing down. We should be paying attention to it. RSI is telling you the same thing. ASO is telling you the same thing, right? ASO warned us on Sunday. A bit laggy compared to the other ones. The stochastic RSI is the fastest one. RSI, medium, and ASO is a bit laggy. But you see that it's turning around, right? So listen, you know what? And let me put a line. Can we put a line here? So let's pretend this is the highest. And you can see that it cannot even break that. It cannot even touch it, right? So you can see that ASO is losing again the territory. So on the daily, that is. If you look on the 3-day, which is more solid, you have the early warnings way before. You got the first warning here, right? And this is where we found the range boxes, right? What was it? The level of 35.5 with the 38 area. So we had a range. You can see there's a ranging inside on the daily. This is the 3-day now. So we had the first warning, watch out what's going on, right? And so maybe we're watching for that pullback. Is that going to be a pullback, a full retracement? No, it's not. It carry on. It broke this 38 level and it went above, right? So again, days later, we got another cross down, right? And RSI again is dropping down. ASO, it cannot, I mean, this is a 3-day now. Let me maximize that. You can see that it cannot break the previous high, right? And make it a bit lower, and touch that high. It did not even get closer. That is on the 3-day. So even the 3-day was giving us the signs, right? We're going to have difficult level here. So go back to the daily. We want to see more action. We want to see more data. So have a look here again. Let me maximize that a little bit. Let me make it a little bit thicker for you for the lines. Please kind of have thicker lines here. Here we are. So please pay attention to this now. Look at how far is the distance between the fast and the slow RSI, right? The RSI is a blue. The red, the pink on my chart is the average, right? It's like the average. And look how distant they are. So there's a lot of push going down right now. So I won't do anything right now with Bitcoin until I'll see these indicators come down and flush down a little bit. So far, so good. Do I make sense what I'm saying? Please let me know. All good? Perfect sense. Okay, good, good. because I need to understand as well your level as well. Whereabouts are we? Are we going to talk about the basics? Are we going to talk about the intermediate? I did a question on the weekend. How deep shall we go into the styles? But I used to teach that on the school for free as well. You know what I mean? And I'm gonna give you extra things that I will not give out to the free school, right? But I need to make sure that we're all on the same page here, and what I look at and what you should look at as well, and don't get caught by surprise. And you don't need to wait for anyone's tweet to let you, know what you should do or not do, right? So, um, I will try my best and I'll give you all my knowledge and I'll give you all my insight and how I see things and why I say this and why I say that. The relationship between the ASO and stochastic. Okay, yeah, I'll give you all these three, no problem. I'll see you. I'll show you how I use them. It's very important for us to understand how we read individually each indicator. There's no let's say there's no reason for us to understand the formula that runs behind it, right? We don't need it. I mean, it's too complicated. But basically, what the stochastic RSI is reading the volatility, the strength of the token, right? So let me maximize that a little bit. And that will be nice. It's going to be a nice lesson here. So stochastic RSI is telling me, how strong the token is. And obviously the scale starts from 0 and goes all the way up to 100, right? So when, you are at the very bottom and it's telling you, what, it's, this is the time that maybe we're going to turn around the direction of the trend, so to say. So we have a downtrend and then it's turning around and we're going to have trend. So for you to get a confirmation about this, how we read it, I mean, if the RSI wants to go down, let it go down. It's telling you that a lot of selling pressure is going on into the market for that specific token. So it wants to go down, let it go down. Are you shorting? You keep on shorting. It's going down, fine. It's going down, it's going fine. When it's reaching below 10, I've changed the bands, right? Usually when you open the stochastic RSI, you get these bands at 80, the maximum, and 20 on the low. I've changed this. I'm more strict, right? And I said, listen, I need to change to 90 and 10. And you can do this by going to settings and you change the number here, right? The upper band and the lower band. And basically what it is, it's nothing special, but what it is when do you, which levels do you see them as overbought and oversold, right? Up to 100. This is like, I can make that not, oops. I didn't want to do that, but never mind. I'll fix that here. Here we got 100 there. And I can put that in red and say this is like the danger zone, right? Or you can say this is my selling point. Let's do this red. We all love red, don't we? So let's put here red, nice and red. So this is like the danger zone. This is the overbought. From this level, like from 90 to 100, what does it tell you? It tells you that the buyers, the traders out there, they are overbuying this asset. They keep on, they're overdone it, right? It's not healthy. It's too much, way too much. So that's why it's called a danger zone. This is the time for you to pay a little bit of attention and see if you need to change your thesis. And below, from 10 to 0, I'm going to make that, sorry, I'm going to make that into green. And that will be your zone for you to be looking in, looking for to change the direction and say, okay, this is enough now. Again, it's the oversold area that people overdone it with selling. They keep on selling, keep on selling. So when the prices goes down, let it come down. And you're not going to change the your thesis. If you are shorting, you're shorting, it's fine, right? You can short. Goes all the way down here to flat zero, the price still goes down, right? Even if we touch the zero here and then next day still a zero and the day after still zero, like 3 days in a row is on zero, right? That doesn't mean that you stop buying right away, because that 3 days, the price action still goes lower. And let's compare this. That was a time it got stuck. It was overextended to zero. And what do you see? Price was going lower and lower and lower, right? The price was going lower and lower and lower. So that's why you need to understand that even though you see zero, you don't immediately jump on your guns and say, oh, it's time for me to buy. No, you don't do that, right? Don't jump into your guns. It's for you to attract your attention and say, yes, I'm looking at you. I'm watching at you. I think the rest of the traders have overdone it and they keep on selling. I'm getting prepared, right? I'm getting prepared. So you're watching these levels. And when you have a cross up, and especially when you have, like, you're watching this cross up and then you have the break of the 10. Now, when you break above the 10, when both lines are parallel and above 10, the region of 10, this is a confirmation that this cross up was, like legit, right? It's a good cross up. And you're going to see price action pulling up, right? So my trigger is when I see a cross up. When I see a cross up, I immediately, what I do, straight away, I open up the other RSI, the simple RSI. The simple RSI, again, is on the same principle, right? It's reading the volatility, but it's got a different formula, how to do the numbers and how to give us these values, but that's nothing to do with us, right? Again, the same strategy. What I've done with this indicator, I've changed the bands. Again, you have upper band on 70 on the simple RSI. I do the 80. And the lower band, they usually have it on 30, and I do that on 20. Or I don't change the input or anything like that. I don't interfere with that. It's like exactly like default, like stock, right? Microstructure. I'll do that microstructure. Miss Measy, long time no see. How are you? You all right? Nice to see you here.
Thank you.
Is it been recorded? Yes, it's been recorded, and I'm gonna put it on the section that we have the recording, Zoom recordings for you to see. Right. So all I've done is change the bands, right? The limits. And I treat them exactly the same level, right? When they go very, very low, this is the point I'm interested. When they go very, very high, this is the point I'm getting very, very interested. Nice to hear your voice, though. Thank you. Thank you. So, so when I see stochastic RSI at the very bottom, like here, immediately, I don't waste time and I want to see where the RSI is. And if I got the RSI telling me the same story, right? You know what is this guy here, the stochastic RSI, is telling us that what is oversold. People overdoing it, right? It's getting into unnatural, so to say, behavior here. So okay, I pay attention, and then I see a cross up, and I see price action go sideways. I say, okay, that's a good sign. That's a good sign. It's doing a stability, right? We're going sideways. Always trying to enter, right? When the waters are very calm, right? You need to get into the market when the waters are calm. You don't need to chase the pumps. You need to get in when everything is calm, sideways, boring. This is the best time for you to get in, right? So it went down and hit that level and it goes sideways. You got a cross up. Also, a simple RSI is telling you that it's oversold as well. So you got two indicators telling you the same story. So, okay, that is no coincidence, right? There is no miscalculation somewhere. I've got two indicators telling me the same thing. And then you can bring the ASO here. which again, it's stock. All I've done is change the colors. The period is the same, 10, right? All I've done, I went to style. On the top, I put the blue because I got the blue candles for my positive price action, and I got a pink for my negative price action. So here's my pink, and it's counted for the negative, so to say, right? So let's have a look a little bit how we read the ASO, right? Maybe give a little bit of understanding about this. Let me hide this area. Ignore this green area, and I'm going to make it black. I'm going to make it solid, and I'll make it to be up front, please. Bring it to the front. So ignore the bottom half. We need to pay attention to the top half, right? We said the pink candle is a negative, right? Down pressure. Price action goes down. When we got blue above, it's telling me it's the positive action, so price action goes up. Same here, right? Now we understand the colors, right? This is down, this is up, this is up. Let's have a look. I mark these areas. Let me bring this up a little bit so we can compare. Make it more clear. I'm starting, minimize a little bit the RSIs. So every time that the negative was in charge, it was above the 50, you see the price action was going down, right? When you go to this little mountain, that like nice peak and turning down, it's telling you that this is most likely to be the bottom. There's no more down move, right? And the same thing with the blue. The price started moving to the up. Price action, let me scale it up a little bit. Price action start moving to the up, and then you got this peak. And it says, listen, the buyers are in control. They're pushing the price up. But now we've got this little mountain, this little peak, and it's turning around. So what do you see? A drop. So that's about, you see, above the 50. Is that the 50? Let me see. Let me grab that to the 50, accurate to the 50. That's what the 50, yeah, just a little bit. You can see just a little bit red. But anyway, nothing too important for you to see, but you need to see the overall who is in charge. So here was the sellers in charge. You see, it was picking up, so it was dropping. When it dropped the peak, the price moved to the up and then start dropping again, right? So you knew that was the local bottom, right? And then while it was getting ready to cross, right, and you were expecting the blue to come above, it never did, right? You got again the pressure, the down pressure building up again, and then the price went further down. When you get this turnaround, at this point that it's going to turn around, this is the time it's telling you, you know what, this is the local bottom, right? And again, second time, this is the local bottom. So, okay, good. Blues, local tops in waves, right? It's telling you that was a top, boom, it goes down. I told you that was a top, boom, it went down. It cannot tell you about how much it's going to go down or up, but it's going to tell you this is the local top. Another local top, and you've got these red candles over there. Boom, it goes down, right? But who is in control? The buyers. Who's in control here, right? The sellers. Price actually goes down. And this is how you read the ASO. This is how I use, and this is how, that's the advantage that I take from ASO, right? I see that the sellers are in control. I need to see when they lose the peak. When they lose the peak, this is the local bottom for me. So let's go back to these three indicators together. So here we got the three indicators. So stochastic RSI was at the very bottom. RSI was at the very bottom. And ASO a little bit later confirmed that was the bottom. So that, while the price action is going sideways, that will be the time for me to jump in and say, listen, I'll grab a position here straight away, right? Another cool thing that you can do with the RSI, another cool thing that you can do, especially on the large time frames, you would like to identify where are the majority of the lows of the RSI that turn around. Where was the most likely that it turn around? I like to find these levels, and I got these levels. That was a very low. That was a very low. That was a very low. Low. Even it went even lower than that, right? But we've got to turn around here. We've got to turn around here. We've got to turn around here, right? You can see this. So I like to mark these levels up, like an horizontal level. Say, okay, you know what? I know that anything below 20 is the minimum, bare minimum, but doesn't always go there, right? So I can't expect for RSI always to hit zero. Here barely went below 20. So I need to see where are the majority of the lows that it turns around, right? And there are some other levels as well. You can have multiple lines. There's no problem. Here you go. You've got another multiple line here that is aligned with other price action. Well, not price action, but action with the RSI that you can see that it's turning around. It touch here, turn around, touch here, turn around. So you've got two levels, 28 and 36. So, okay, I need to monitor these levels. So once you mark these levels, right? And this is how I use them together. And I say, I need to pay attention when all these lovely indicators with my intelligent agent, right? The Secret Service, they're going out and telling me, you know what? The market is at the very bottom. RSI is at the very bottom. ASO is confirming this is at the very bottom. I grab this, right? I grab this. And now the question is, how do you grab this? I mean, what kind of market are you using here? Are you using futures or are you using spot? Well, on the bear market, I love using spot, right? Because I have no danger, no risk. I'm making sure that the market will not give me any heart attack, so to say, right? I don't want any surprises. So if anything happens in the market, it decides to go down, fine. It's just gonna devalue my position, but it's not gonna get me liquidated. If I want to do some futures and stuff like that, I use the same principle, the same strategy, and on different time frames. I can do that on the daily, I can do it in the 4 hour, I can do it even all the way down to 15 minutes. And I can give you some examples later, no problem. But this strategy, like the daily, the 3 days, and the weekly, it's the time frame that I love using for me to see what's going on with the market. And if you use that on the monthly, right, let's go to the month, you can see clearly with these indicators, right? Let me do the horizontal here. Where are the majority of the lows? Here. So when I got these two guys aligned, got a cross up, and that was the bottom of the RSI, and ISO telling me this is the bottom, that was the bottom of the whole market. Right? From this point onwards, I always look for longs. That's it. All right. This is my spot entry. I need to enter in spot as low as possible into the market. And I'm going to do this with a monthly. Right? What are the chances for me to get wrong here on the monthly? Very rare. Very, very rare. Right? Never say never. But it's very difficult for me, if I use a monthly and I get the indication this is flat down, right? Stochastic RSI has been flat for many, many, many months. Look at that. March, April, May, June, July, August, September, October, blah, 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 blah. Almost a year later, you start having a cross up, right? So, as I said before, when you see RSI flat, that doesn't mean you start buying, right? You just monitor these levels. You're waiting for the cross up, and also you're waiting for the other RSI, the simple RSI, to tell you when is the time to turn around, right? How can I get the three indicators? It's free, it's simple. The first one is stochastic RSI, right? And the other one is the simple RSI. the relative strength index. So if you go to indicators here, right, and you tap RSI, it's going to come up here first. Relative strength index is the first one. And the other one is the stochastic RSI, which is down here. Stochastic RSI, right? That's it. That's the two indicators. The third indicator, which is at the very bottom, is the average sentiment oscillator, is ASO, right? Average sentiment oscillator. Put a little star on the front and it's going to be on your favorites, right? So if you type ASO, it's going to be the first one. Average sentiment oscillator. Put a little star there and you won't lose it. What's the atlas? Well, my little atlas here is a trend line, which is a support that comes all the way back in 2011. I'll draw that trend line, and this is my major support. I don't want to ever see Bitcoin below that line. And I call it Atlas because Atlas in Greek mythology was the god who was holding cosmos, right? And up here, I used to have another call sign. Up here, another sign here was called Olympus, right? Was the highest peak of the mountain, Olympus. Well, that was the current high. Anyway, enough of that Greek mythology going on here, right? And you can see that it was overextended, right? That's why you don't take action straight away on its own. That's why I use a combination, right? So I take action when I see a turnaround of the RSI as well. So I've got a cross up and a turnaround at the same time. ASO confirm a little bit later. ASO is a bit lagging, right? But anyway, I knew, right, that was the sellers are in control. And when you're going to see a turnaround, a peak, that will give you a notification that was the bottom, right? Two indicators like the twins, the stochastic RSI and the RSI is good enough. ASO is like just a confirmation. It's like your last little agent out there is not very experienced. It takes a little bit more time to bring the information inside to the agency, right? But give that little guy a break, right? It's going to save you other times on other time frames. On a larger time frame, it's a bit lagging, but it's there. So you've got three indications, right? So three indications that most likely is the bottom. And this is what you need to use on a spot mindset and say, listen, I'm buying here, and you go like really heavy, right? You said, I'm going to put a large amount of money here in spot. I'm going to load my bag. That is on Bitcoin. That doesn't mean automatically you go run on altcoins and start buying altcoins because you've seen the bottom of Bitcoin. And I explain this why. Because Bitcoin started moving since last year, right? Last Christmas. It was a good Christmas for Bitcoin. It started moving away from 15 and start moving in January. That's a January candle, right? Huge blue candle in January. So after Christmas, New Year's, it was a good day. Yeah, good time for Bitcoin. The altcoins did not start until last September and October. The stars just moved, right? And let me bring an alt. It is quite, it is good for you to do this comparison because you need to understand that. Let me find a good solid that has a lot of data there. Let's have a look. Okay, that has some data here. Let's go to weekly, maybe daily is fine. Get some data here. And let's have a look. When did it start moving? Where did it start moving away from the floor? So that was a floor, right? We can see that it was like a floor. It wasn't doing anything. It started moving when? October, late October. The 22nd of October, it started moving, right? Bitcoin start moving last January, right? So where's January? January here. So that was Christmas. So that was Bitcoin that start moving to the up, right? Bitcoin was moving up, alts moved a little bit up, and then, while Bitcoin was moving, the alts were diving. right? So be careful. Because you've seen Bitcoin moving, that doesn't mean you jump in straight away to the alts. You have to do the same thing with every single token, right? Right. So here we are. Let's go back to this. So spot mentality and investor mindset, like you are investing your money and you want to make money seriously, you need to look on the monthly, right? These three indicators are good enough. Now, if you want to go one step further and outrun the rest of the traders out there, we can bring extra few more indicators, right? Now, these lovely indicators here, these two guys here. I mean, I'll show you, and you're going to tell me later how do you feel about these indicators. The first one is the Traders Dynamic Index, right? Let's have a look. Traders Dynamic Index by Lazy Bear. It's free. You can download it, right? Traders Dynamic Index. In short, TDI. TDI underscore LB, which LB stands for Lazy Bear, right? That's the first indicator. The second indicator is the RCI lines. RCI lines, right? Here we are. By Jero. It's got like 6.5 almost thousand downloads. Right. So these two indicators on the monthly are very powerful as well. These two can tell you when you're starting from the bottom of the market, like the start of the bull run, and they have the magic power to separate in two phases. Phase one of the bull market and phase two of the bull market, right? So let's take one. Let's have a look here. Maximize a little bit, and I'll take 3 examples here. We've got 3 examples. You can see all full screen, right? Right. Okay. We need to pay attention. It's like the stochastic RSI. Let it drop down, and you need to pay attention when it cannot go any lower, the red line. And we would like to pay attention when it's crossing up with the green, like the stochastic RSI, right? So that's easy to remember. So we want the red one to turn around, and we'd like to see crossing up the green. That's the first condition I would like to see. And that happens again here. You see, it's dropping down, it's turning around. That should, bring things to your attention. Something's going on here. We've got a change. You may, look at it and get a position. While it's crossing above the green, it's like, okay, we're looking good. It's like a confirmation. It's like, yeah, we're looking good, right? Same thing here. Was dropping, came down very low, moving to the up, and managed to cross above the green, which is very, very good. So the first thing that you need to see is when it's going to turn around, right? Exactly the same with stochastic RSI. Extra bonus when it's going to break the green. Very, very, very important. This is the first two things that you need to watch, right? Like the EMA in the Bollinger Diagram. Yeah, it could be. I'm not 100% sure about this, but it looks like it, right? It seems like it. It's very similar. You've got the clouds as well in the Bollinger as well. So you need to touch the bottom of the cloud, right? And you need to turn around and you need to cross over. Also, what we like to see, we would like to see both of them, not one, both of them, the red and the green. I need both of them to be above the yellow line, right? I have to see this. When you get these two lines above the middle line, the yellow line, so I make the yellow line a bit thicker because we've got the green and the yellow, they're very matching to each other. So let's make that yellow white and stand out there and make it a bit thicker. Right, yellow, is that okay, yellow there? Can't make it any color that I will understand there. I'll leave it yellow, right? I think this. So when you break this yellow line, this is the separation that I said before between phase one and phase two, right? So this is the bottom of the market, and we are going towards the phase one. And when you break this yellow line and you go above these, is the phase two. So this is number one and number two. And you can say, like, when you are in the green cloud, this is the first phase. And when you are getting to the second cloud, which is the red one, right, this is the second phase for the bull market. Can I repeat the indicators? Yep. Tracking, no problem. TDI stands for Traders Dynamic Index by LazyBird, right? Traders. Here we are. Traders Dynamic Index by LazyBird. And the second one is the RCI lines, RCI 3 lines by Jero. Right, and put a little star here. It has a star on the front of these indicators. Enable that little star, and it's going to be always under your favorite. You won't lose them again. Right, so let's go back to observation here. So very nice for you to catch the market on the phase one, but please make sure that you always catch the second phase, right? Phase one, phase two, phase one, phase two. Now let's bring price action here. This is on the monthly, right? Let me close all these. You don't need this now. I'm going to give some space, right? Space and space. And let me bring that lower closer to the price action. Let's minimize that there. I'll come back to this later. So let's go back. Let's back test this, right? I want to go all the way back and we're going to back test this together, right? I don't want anyone to have any questions. Like, I don't want you to have doubts, so to say. I don't want you to question the indicator. So when you got the red line turning around, right, that was the bottom of the market. And when you got the red line breaking the green, you still some momentum, right? Some movement. Let me scale this up, right? Now, let me see. This is the bottom. Let's do the line here. So that was the bottom, right? And you got a very tiny, it's not even a correction, but it went up and then it went down a little bit. So you got this line here, this level here, that it touched that level and you see a massive push down, right? It's like a small correction. And after that, at that level here, so I'll do a vertical line. We got both of the lines above the yellow, and that is that candle here. So that candle here managed to break the previous highs of that structure. So why was it important for me to do this, right? That is because that was the bottom of the market, and that was phase one, small correction, breaks that level, and it ends on the second phase. Retested, and off it goes. Phase one, it gave back then 150%. On the second phase, that is in the way, but never mind. The second phase is above that yellow line, and it went all the way up to this level, which is 3,500. So if you didn't manage to catch the phase one, make sure you catch the second phase, right? Phase one, 150. Phase two, 3,000 and a half. Right. So let's do these on the next time that these events took place. Very bottom, right? Red line turning around. That was the very bottom here. Here it is, right? No need for me to mark. Very bottom. Start building up momentum when the red line goes above the green. You see the big candles here. No problem. So that was the beginning. Where do we have both of the lines crossing above the yellow? Around this level, right? So that was when we got these candles here. It was when we got these two lines above the yellow, right? So phase one goes up, finds some resistance, comes down, right? And finally, it breaks these areas, right? With these candles here, that both of them are above the yellow. Let's measure these. Right bottom to these rejection, 343%. Let's measure the second phase. The second phase, from that level, when the first phase ended, right, all the way up to the top, it gave you another 394, almost 400%. On the same level, I'm not counting after the correction. If you take the correction, it's 1,400%. If you want to count the correction. But if you want to go a level by level, right, that's the first phase and that's the second phase. It was almost 400%, right? And if you want to take the second peak, it was around 438%, right? And then you see that red line start losing steam and it broke the green. It did the opposite, right? And that was the time for you to say, uh-oh, we're getting out, right? Came down, trying to push one more time. It never break above the green. Boom, it goes. And that was it. I mean, that was the trigger here to tell you that was a top. It came down, tried to push one more time, but it didn't really give that much. It went down. You see, wicks here, right? And that is on the monthly. So on the monthly, with that indicator, can tell you where and when is the top and the bottom of the market. And with these strategies and approaches, you're going to outrun the most of the traders out there, right? Now, how we use that together with this one, with this indicator, right? Let's put the lines down here. So let me minimize that a little bit and let's pay attention to this one. How that can be any help. The red line is like the cycle. This is the very bottom, this is the very top of the market, and this is the very bottom of the market. This is the very top of the wave. This is the bottom of the wave. This is the top of the wave. So the red line is acting like the direction, right? So that was the bottom, and it's going up. That's the top, and it's going down. Look at that. That was the bottom, and it's going up. When you reach the top and you turn around, we got a correction. When you reach the bottom, and it wants to go up. And that's what we got, right? This is about the red line. Now, again, you got like blue and green. How do we use that? We want, when things getting very, very interesting, it's like the same with the cloud when you go above the 50, when you go into the second part of the cloud. The same thing happens here with the blue and green, is when the red is bypassing the blue and bypassing above the green, this is where things get very interested. So while, the red line stays above the blue and the green, there's a high volatility, like high momentum, right? It's pushing up the price. When the red is pushing down, right, this is bad news, right? It's turning around. We know that it's a down wave. When it's losing the green, it's like, okay, you know what? This is a warning. The real bad news for the red is when it's going to lose a blue. Sometimes it's going to cross first with the blue and afterwards it's going to cross with the green. Sometimes it's going to cross first the green. The bad news for the RCI lines is when the red is going to cross down the blue. Every time it's crossing down the blue, we're going for a big dump. red crossed down the blue, dump. Red crossing down the blue, and you got this dump, right? Even that it trying to push one more time, it was under the blue, big dump, right? So when the red goes under the blue, big troubles, right? You don't want to be in interlongs. But on the way up, when it's moving, we want 100% the red line to be above the green. So why these two indicators that go together? Because we want both of them the same story. You don't rely on one person alone. You don't rely on one indicator, right? You need as many inside information, your little agents out there. You need to bring the same story. They need to come up with the same story to convince you that they have the right information for you. So you don't go blind with just one indicator. So that indicator told me that was the bottom, and we are moving to the up, and we got a cross of the green. Very nice, lovely. And we got also the crossover above the 50, which is the yellow line, the second phase, right? The beginning of the second phase. That is very good. However, we wanted to see the red to be above the green. So we got the early signal that the red went above, but the green wasn't. And also we had the red below the green. I said, yeah, okay, yeah, we are heading towards the second phase, but it's not there yet. It's not confirmed. When did it got confirmed? I'll tell you the date. It got confirmed on the 1st of December because this is the monthly time frame. On the 1st of December, I got the green above the half on the second part of the cloud, and also I got the yellow above the green. That was the confirmation that we entered on the second phase of the bull market. So now it's like no turning back, right? So we got this boring moment, this boring market here, the phase one, right? Up to here. We got 150% up, right? And now we are entering on the second phase of the market. So we are expecting more moves. I cannot predict, so to say, or give you numbers. How far will it go? That will give, and it's that you need another indicator to tell you which levels you should be looking. And that is the Fibonacci. The Fibonacci will give you an idea which levels you should be looking, breaking the all-time high. And the first level is 83, second level 102, another level 122. And, it's going to go level by level. Always, always, always it's going to be level by level. And so you're going to ask me now, okay, how come do you know this? I mean, okay. Let's put into a test, right? So let's pretend that was a down crash, right? So that was one of the previous bull markets. So from this level, it went all the way down, right? And it started moving up. It broke this level? It did on the next bull market. Did it break it? It broke it. Did it break here? It broke it. Did it break that? It broke it. Right? It goes above these levels. And if I extend these levels to the right, and let me do extensions to the right, you can see that these levels have been respected, right? They have been respected. Even way after that bull run that broke these green lines, right? Look at that rejection here. Look at these rejections here. Look at these rejections here. Have a look at these rejections here, right? Look at these rejections here. So that Fibonacci was drawn all the way back here, right? But still is accurate about the levels in the future, right? So Fibonacci is a very, very strong tool to use. And if you've got a very solid foundation, like where you can apply the Fibonacci, it's going to work its magic for you. Now, the first target that I have here is the 48 and 58, the all known, like what everyone's talking about, the 48 and the 50s. And that is why. That is because I put the Fibonacci all the way from the very top to the very bottom, and that is the future golden zone, right? So it goes down, goes all the way up, and I'm using the future 618, which is what? 48 and 658. So what do I expect? I expect a major rejection in these levels because it's a psychological level. It's working with other traders, right? They're going to think, not only you, other traders are going to think that maybe this is the time for us to take profits. Why? Because we hit the golden zone. We're always reacting to the golden zones. On the downside or the upside, it doesn't matter what it is, it's the golden zone. And everybody is going to react to that golden zone, right? So that's the target in the future. Now, so far so good. You are a bit confused with the two last indicators. Okay, you'll get there. They're not easy for you to understand because you'll see them for the very first time, I believe. Chance? No, it's chance. Okay, chance, are you there?
Yeah, yes, for the very first time I'm seeing them, so I'm not sure because you are mentioning about phases. Are they predicting the Bitcoin phases or are
Yeah, the phase,
supposed to
phase
be?
one and phase two.
All right.
The
So
phase
they are
one.
actually.
Yeah, okay. Let me explain very quickly about the phase one. The phase one is when you get the red line turning around. You see it's a downtrend and it's moving to the up, right? That is the phase one, the beginning of the phase one. And the beginning of the phase two is when you get both of the red and green line above the yellow. So this is the beginning of the phase one, and this is the beginning of the phase two. This is the beginning of the phase one, and this is the beginning of the phase two. So we are in the beginning of the phase two since December the 1st. Does that make sense? And you have the same example here. This is the phase one, and this is phase two. And this is the end of the bull run, right? That started January the 15th. And it finished December the 2017. So it took almost 3 years, right? The other bull run that we had was back in 2019, February 2019, and it finished April 21. 3 years, right? So we started last year, the phase one. We started last year. It was, what was it? Here it is. That was December 22 when you start moving to the up, right? And we know we're not even near to the end of the bull market. We are just entering phase two. We're still ongoing. Right. There we are. So I hope that gives you a little bit more understanding about phase one and phase two, stuff like that. And
Yes, it does.
okay, good.
And also, I've tried to put the RSI indicator on,
Yeah.
but my comes with two lines. There's a yellow and a
Oh,
purple line.
it's got a yellow line inside the RSI.
Yeah, in my
Yeah,
RSI.
okay. Inside the purple's got a yellow line. Okay, that is you got extra AMA. Let me bring the indicators here. Number 3. So inside your RSI here, you got an extra yellow line. When you see this, all you have to do, go
Yeah.
to settings, style, and disable the AMA, right?
Okay.
RSI best AMA.
So it
And
means
that's the yellow line on your indicator. So if you untick this, it will go away.
So the MA, that's inside style or input?
No, style. Input
Style.
is just numbers. We don't change anything on the style. It's telling you what kind of AMA, simple MA, right? But on style, you just enable it or disable it. I'll just disable it. Right?
Okay, we'll
You
do
got
that.
that?
Yeah, I'm trying to find it. I'm in style now, but I couldn't find where to disable.
Okay. Go to style and it's the second option. Under the RSI, you got RSI based MA.
All right, okay, I just removed the thing. That's
Okay. And you're going to see the yellow color as well.
Thank you. Yeah, that's good.
Good, good. So yeah. So now that we spoke a little bit about the indicators like the RSI and the stochastic RSI and the ASO and the Traders Dynamic Index, right, and the RCI lines, when you get all these indicators out there, you get a better view and better understanding whereabouts you are in the market for that specific token. And we just, did a back test on Bitcoin, which is the king of all. But if you go into a smaller time frame, like 3 day, stuff like that, I like the 3 day. I don't know about you, but you may use a daily, right? But 3 day, why do I like the 3 day? Because it contains less noise and is less likely to give me wrong information. Because the lower the time frame you go, the indicators have more data to calculate and they look more closer. And what do I mean by looking closer? Closer in time-wise. If you go to inputs on the RSI, you see that it's calculating the last 14 candles, right? You see the RSI length, right, is 14 candles. So it has to measure the past 14 periods. So the larger the time, if you're on the monthly, it's going to give you values based on the last 14 months, right? Quite heavy. If you go to the daily or you go to the 4 hours, it's going to calculate the past 14 days on a daily, right? Nothing close into comparing the 14 months, which is over a year, with just 2 weeks. Different data, different values. So the smaller the time frame, you get more values, so to say. So you're going to see like, let me go to 3 days. I'll give you an example. And you see how the waves are, right? And I'm going to trace them a little. Go up and they go down and they go up and they go down. So this blue line that I've just designed, pretend this is the 3 day. Let me change the stochastic RSI now to the daily or to 4 hours, right? And look at that now. Let me maximize that a little bit. Right. Too noisy, but I'll fix it. Don't worry. Here we are. So that was one wave up on the 3 day, one wave down, and that was one wave up. But look on the 4 hour, how many times the stochastic RSI went up and down in the meantime, right? So we've got one wave up, one wave down, a second wave up. So we've got one cycle and a half, right? But look how many cycles you have in the stochastic RSI in the 4 hours. You've got one cycle, 2 cycles, 3 cycles, 4 cycles, 5 cycles, 6 cycles, and on and on and on. So you've got more data, right? You've got more values. It goes up and down, right? That is more noise. You cannot base your long-term strategy or mid-term strategy based on the 4 hour stochastic RSI. It's impossible, right? It contains a lot of noise. And you can see the price action here. Well, it makes sense on the 3 day stochastic RSI. Look at that, right? Look at the wave. Goes down, goes up. Price action goes up. RSI 3 day goes up. Look at the 4 hour. It goes like crazy. What the 4 hour does is calculating inside of that daily candle what happened. Happened many things, right? Many things happen on the 4 hour. So it's best for you to use a larger time frame for you to understand whereabouts you are in the market. So if you see that stochastic RSI is the very bottom, you got a cross up, and RSI is telling you that, what, we reached the bottom and we're going towards the up, then what kind of trades will you be looking? even on a smaller time frame, even if you decide to go long, right, on a 15 minutes and trade like, scalping, or you want to do a market structure, or you want to do like high leverage futures a little bit for a few hours and make some money today, or for 2 days, for the next 2 days, I want to make some money. Then you come back to the 3 days or one day and say, okay, whereabouts are we? Okay, this is the bottom. Okay, so there's a good opportunity for long. All right, now I need to make some money today. I go down to the 15. Okay, where was my mark here? Where was my marking? Let's have a look. Here we are. So that was the marking that I said this is the bottom. And from this point onwards, I should look for long. So now I am on the 15 minute. And this is the area that I marked. That was the bottom. And have a look. 15 minutes. And ride the waves. How much percentage do I have on the way up? And how much percentage do I have on the way down? I got 4% on the way up, and I got 1.8% on the way down. So which way should I go? Should I go long or should I go short? Right? So that's why, it uses a larger time frame to give you the direction, the clue which way you should go. So if you know that, the market is telling you this is the bottom, you're not betting to go against it, right? You want to go with the trend. So if it's telling you this is the bottom and we're going up, I'm looking for long opportunities. I said, okay, I'm using a smaller time frame because I need to make money now. I'm going in now and I want to get out in a few hours and book the profits. I need some money now. So you can go all the way down to 15 minutes. No problem. You can do that. Right? And on the 15 minute, let me clear here the noise. You can use the same strategy. The same strategy. And say, listen, where are the most common lows on that stochastic RSI? On that 15 minute, that's the most area that every time you're touching that area is turning around. Okay. Can I find stochastic RSI with the RSI telling me this is the bottom? Okay. Here we are. Very bottom, very bottom. ASO is telling me the same thing. That is the bottom. I go long, right? And you buy futures and you go long. Goes up, doing some correction, goes up, goes up, goes up, goes up, goes up. When are you going to exit? When? You're going to exit, right? You put a trend line and say, listen, you break that trend line, I'm out of it. Just put a trend line there and say, I'm going to grab my profits every time you're going to break my trend line, right? That touch the trend line, did not retest it, it recovered, goes up, goes up, goes up, touch the trend line, goes up, goes up, goes up. Oh, here we go. We got the break of the trend line. So you broke your trend line, right? How much was that? All the way, I go to bodies, ignore the wicks, and I go exit under the trend line that got broken. 2.8%. If you took that with a 10x leverage, that is 28%. And you use the same strategy, like stochastic RSI at the very bottom, RSI at the very bottom, ASI was center at the bottom. That was my entry. My exit, I'll let it ride, let it go until it breaks my trend line. How long did it take? Let me measure that, and all the way there, it took you 2 days. And remember that I usually say to the school that you should target 5% per day. Do that 20 times in a month, and you double your account every single month with just 5% per day. 2 days, you got 28%. Divided that, it's like 14% per day. And your target was 5. So you almost triple your daily target. Just with that simple strategy. Right? hope that makes sense. I hope that is easy. I don't want to, I pick up random moments, right? I just went down to 50 minutes and just picked up a random moment. All you need to do is make sure that you use a combination of indicators. Like I use 3 here, right? Even on the 15-minute, use 3 to give you the same story, right? Pretend that you're a judge and you have a court case going on and you need as many evidence for you to get, convinced what's the story going on. And you got stochastic RSI, this is the bottom, RSI is telling you this is the bottom, ASO is telling you the bottom. So you got like 3 witnesses here telling you this is the direction, this is the bottom, and this is which way you should look at. Right? So try to make things as easy as possible, please. A lot of time frames, you're gonna target high percentages, right? If you want to target like 400% moves and stuff like that, you need to go after the weekly. If you go to the daily, you're going to target like 20%, 30%, stuff like that. If you go to 15 minutes, you're going to target 2%, 3%. The lower the time frame, it's going to be more tempting for you to go high leverage. And not a lot of people are going to make a lot of money with 2% move, right? And say, 2% is too low. What can I do? Well, to make it worth it, automatically the answer will be like futures, right? High leverage. All right, okay. Be careful with that. Right? Futures, it should not be the primary strategy for you to create money in the long run. It shouldn't, right? Your long run should be spot, and the daily should be the minimum. Right? The daily should be the minimum time frame, the smallest, so to say. So let's have a look. What's the time? It's almost 4 o'clock my time. So the US Open is running. So let's have a look what Dixie is doing. Let's see the US, how they're going to react to it. Let's have a look. Dixie, come on, Dixie. Oh, right. Look at that. Huge dump on Dixie. Right. Okay. Oh, that's 15 minutes? Really? When to the Open? Let me check something. Is the website with the clocks working? Yes, it's working. Okay. Yeah, we got the US Open. No, we haven't. Only Brazil is open. Okay, we can still go time. We'll still go time. Right. Okay. So we've got another half an hour. Uh, 1W difficult, small capital though. Yeah, ma'ams. Weekly and monthly is for you to know, weekly and monthly is for you to know whereabouts you are in the market. Are you at the, it's a bear market and you're at the top of the bear market, or you're at the bottom of the bear market, right? Same thing with the bull market. Are you at the top or the bottom? Yeah, we're still in the European session. London, Zurich, Frankfurt, Moscow. Moscow is not Europe, but they're still open. Johannesburg is open. Right, so we're going towards the opening of the US anyway. So we're going to see some volatility because you're going to have 2 markets at the same time. Right, so you're going to have Europe and US at the same time. So you can understand how much, large sums of money are going to be transferred in and out. Right, let's have a look on the 4 hour, 1 hour. what Bitcoin is doing. So anyway, this session today, it was kind of a welcome session for me to meet you and see you on the web room. So it's my first EMA on the web room. I see some familiar names and faces here from school, but I'm glad that I see you here. And also I want to do a touch ground to see, you know, if you are aware of these indicators and if you understand how we read them and use them together, right? And I want to make sure that the day after, right, it's a better than today, right? And that's what I want. I want all of you to succeed and make money and not to be surprised by the social media or by, use the indicators. The indicators are telling you the whole story. I mean, like that. We're going down, right? It's no brainer. It's going down. Right? That was the first cushion here. It's going to go down.
Really know how to do that.
Right? Another thing for you to also remember, when you see huge wicks, that was the first question that I did, right? When you get a huge wick, right, you know that it's a buying pressure.
Oh, man.
But also, we need to remember that these huge wick candles, right, they usually get filled. Not always, but most of the time they get filled. So when the price goes down suddenly and then get pushed up, it usually comes down a bit slower later and fills what? The gap. There is a gap here. So the candle fill a little bit the gap and then it's going to come up if it wants to come up. So yes, there is a lot of buying pressure here, but maybe they're going to let it come down to fill the gap, right? That huge wick here is a huge gap. So they're going to fill that gap and wait for these to come down as low as possible. Now, the stochastic RSI is going to be the fast one. It's going to be very fast one. When stochastic RSI is going to hit the bottom and start crossing up, that will be the time for you to think and consider for you to catch up the next wave up, because the stochastic RSI is telling you the direction, right? I think there's no doubt about this, right? This is the very bottom. It's telling you up, price action goes up, right? Goes a little bit down, goes down sideways, right? Trying to give a new high, it didn't manage, and then goes down, boom. And that was the time you got a new cross up very low, not at the lowest point, but close to the 10 area, and then you have a new move to the up. And then you got a cross down, that's a down wave. Cross up, up wave, right? So stochastic RSI pretty much is telling you the direction. So right now, the direction is down, right? Nothing closer to the up. So don't try to catch these and say, oh, there's a great opportunity for me to go low. Yes and no. Yes and no. Yes and no. Wait, right? Wait for these stochastic RSI to come down and reset, and let that RSI come down, because when they come down and reset, they have more room to work later on the up move. When things are overheated, right, there's no room to go further up. It needs to come down and reset. Once it's resetted, it comes all the way down here to the bottom, boom, it goes. There's plenty of room to go up, right? That's another little trick there. So horizontals, very crucial about horizontals. You need to be getting very good at horizontals. How you do that? Again, the little trick, larger time frames, scale down a little bit, and look where are the horizontals, right? This is how I got the horizontal. Here it is. Why is that? Multiple rejections as support, and another support there. And then it lost the level. It acted as resistance twice, right? Comes down, rejection as resistance, rejection as resistance, right? So now if it wants to come down, if it wants to come down, we need to find the horizontals. So we've got one major key level here, 31.8, which is a big cushion, right? It hasn't, let's say recently, it hasn't been tested as a support yet. So we pay attention on 31.8. And on the daily, we have this little range, right? We have that little range, that level there, right? And then got rejected to these levels, got rejection to these levels, rejected to these levels, rejected to these levels, rejected to these levels. So we're bouncing up and down into this level, right? So we've got two levels here. What are the levels? 35.8. So let me write this down for you. So that is the 35.8, 35.8. And put a little K there. And I can put it in nice color. We're not that blind. We all can see. Here we are. 35.8. Right. And that is the 38 level. So you got these two levels. Right. And we're going to monitor this. And I'm going to bring this to the right. Let me extend this and say, listen, you know what? How far will you go? Are you going to touch that 38? Maybe. Maybe it's going to get close to these levels. Maybe. Right? So at least now I'm targeting these level here. Right? That level here, I need to watch out for this level. Right? If I lose that level, right? That's for you to keep in mind. If we lose that level, if we bounce, we're good. If we lose that level, watch out for this level. Right? And what level that is? Is around 440, round number 40. So keep an eye on the 40. So I'll write here 40. 40K. Because that was the first bounce that happened of that huge dump, right? That was the first that level that got rejected. So we're going to watch that. If we lose that 40, maybe we are targeting around 38. So far, the indicator is telling you that it wants to push down. Let it push down. Let it go down, right? Because the more further goes down and dives down, that means we're going towards the correction, the retracement. The market will get released. The indicators will get released. All this tension will go away. All this high heat will go away. Few retailers that are not us, they're going to panic and going to leave running and say, oh my God, it happened again. I got, wrecked, red days and stuff like that. Don't worry about it. We are not one of them, right? I'm going to be nice and calm and wait until when? Until when Bitcoin is going to come down into any level, do a little bit of consolidation, like price area discovery, like the area. Is this a support? So if it's acting as support, and when the RSI is hitting the bottom, right, and RSI, that is a bit slow, right? This is my little dinosaur here. It takes a little while for that to come down. But, the lower it gets, it's better. I mean, let's do a little bit, investigation here. Let's have a look. Right, RSI. What happened with the RSI here? Let me fix this. Make it nice and pretty. Come on. Let's give it a nice. Try that here. So what happened here? It lost it a little bit, right? It went below, trying to reclaim it, and lost it again. And then it went to these lows. Obviously, it didn't like it and trying to reclaim it, right? But it did not come to, not even close to the previous highs. So now we lost the trend line again, and we're going down, right? Now, if you want to pull a trend line like this, it's already below it, right? I mean, it's already under it. So the next best thing you can do is find horizontals, even on the stochastic RSI. Nothing wrong with doing TA on indicators. Nothing wrong with that. So I know I've lost that trend line. And that was a little bit of a warning, right? Look at that. I lost the stochastic RSI and trying to reclaim it very fast. That was a sign that maybe it's going to lose it again, right? Maybe. So this is what happened. Nothing wrong for you to do horizontals. So I got one horizontal here. Let's have a look. Can I find an horizontal, please? Okay, I've got majority of horizontals around here. Here we are. So we got this RSI now getting close to these levels. And the question is, are you going to bounce off or are you going to lose it? Right? And then when you need to target another level, where are another level? Let's find another level. You've got most common levels here, like acting as support and resistance. Let's maybe go to a higher time frame. I'll leave it. I'll leave it as it is. I'm not going to chicken out here. So here we are. So we've got another level here. Right, multiple support and resistance. You need to see that horizontal levels are pulled out when you get both indications, like while it was support and while it was as a resistance. Right. So when and if it's going to lose that level, maybe you want to target that level. The lower it goes, even better. But remember, it's a dinosaur, right? It's a dinosaur. It takes a lot for the RSI to come down. So I'll leave this here. This is on the daily. I'll leave it here. Visibility, please, on the daily. So daily. I'll leave that here. Put a little text here and says, this is 1D, right? Just for me to remember. 28. Too big. 20. That's good. Right. Okay. And let me do the same thing for here. This one. So 1D, please. Right. Visibility, again, 1 day. And I'll try to lock it as well. Make sure that it doesn't move. And I'll lock that one as well. And it doesn't move. And here it is on the daily. So we're going to come back tomorrow and the day after and have a look what's going on with that Bitcoin RSI on these levels, right? Here we are. The lower it goes, the better, right? And we're going to see what's going to happen. Let's have a look on the net 1 hour. What 1 hour is telling you? Have a look. Right. The 1 hour, it went under the UA open. That was the opening of the everything. It was at 10 o'clock, 8 o'clock, 10 o'clock. No, that one here. That was the opening of the EU. It went a little bit high. So the Europeans gave the opening a nice hopium. And then now towards the end, what they do? They dump it. Right. So it's not closing yet. We're getting towards the end of it. Now soon we're going to see the EU open and we need the US open, and we need to see what are they going to do. Right? We've got multiple levels for you to watch out for these levels. On the smaller time frame, this is bad news, right? If it's going to break that level, it's going to target that level there. No problem, no worries. It's going to happen. Right, so let me bring that up here. Right, and what's the number here? Let me see. Coordinates 40.4. Okay, we can say 40.5. Round numbers, right? So here we are. So if when the US opens and we see Bitcoin dropping and losing that level, it's going to target the 45, 40 and a half, and maybe later on that 35.8, right? So watch out for these levels. And the 38. We've got another 38 level as well. We'll see. So let's go back to the daily. Here we are. That's the 38. That line was visible only on the daily. Right. So how are we doing? Are you doing this every day? No, I'm not doing this every day. What, you want to hear my voice every day? You're not bored? I'm not that famous yet. No, I don't have that voice. I don't have that radio voice. No, I do. I'm going to do 4 sessions on the whale room, all right? Because this is the whale room and we are the whales and we're going to do more stuff together. Right, where's my time schedule that I put up there? Right, times, and I'm going to give you this time schedule. right? Uh, no. Let's skip that. Go back. That's the one. So this is the time schedule that I have right now. You can screenshot it, you can save it, and it's going to be up on the events, right? So Monday in the morning, I'm going to be in the school, but in the afternoon, like today, I'm going to be here with you, right? So I'm here with you on GMT plus 2, 2:30. Tuesday, however, tomorrow, I'm going to be morning with you. So 10 o'clock GMT, that is around 8 o'clock in the morning, London time. So I'm going to be in the morning. Wednesday, I'm going to do it again in the afternoon, and Thursday, I'm going to do the morning. So you can see it like the zigzag pattern, right? I'm going to do evening, mornings, stuff like that. So, yeah, I'm going to be every single day almost on the shows, but yeah, 4 days, I'm going to be straight in the web room, right? Up at Friday. Now, next Thursday, and this Wednesday, I need to confirm about these two for this week alone. This is the general time schedule, but this Wednesday and Thursday, because I've got a day job as well, still, I got a football production for the UEFA games in Cyprus. So Wednesday, Thursday, I'll be in the stadium, but I'm going to confirm it, right? Not 100% sure, but I mean, the match is going to happen, but I'm looking for how many people they're going to run the production if I can skip it. Most less likely, they won't let me skip it because I'm the senior sound engineer for the UEFA game, so I have to be there. Even if I don't want to, I have to be there. Make sure things roll out smoothly for them. What are the topics? The topics are to make sure that all the basic traders out here, the basic whales, the little dolphins, right? They grow up and they become big dolphins, like the orca whales, right? The orcas. So I will make sure that the all the people that have basic understanding and knowledge will can progress them, and slowly, we're gonna move them all the way up to the advanced, right? And we're gonna become like the big whales, right? And the topic here is like swim with the whales. Why is that? Why I choose that topic? That topic is we need to learn from the big boys, like the big whales, and learn to swim with them. And we need to adopt exactly what are they doing. So we need to do exactly the same thing what they're doing, right? And we need to move like whales. We need to think like whales, and we need to act like whales. So in the end of the day, we'll become whales ourselves. Even if I'm a penguin, I will act like a whale, right? So, oh my God. Microstructure. Okay, you like the microstructure. We can do microstructure. It's no problem. Can we discuss about some spot tokens to hold? Okay. All right. Jackie, don't go to Thames, all right? But yeah, we're gonna be out in the wild ocean. We're gonna have plenty of space. Hmm. Um, yeah, microstructure is I've got I love microstructure. Miss Missing remembers and knows me that I practiced microstructure before, and almost I got told off by the school, and that was um yeah, I mean everyone was trying to find their own it was quite funny how the story revolved because I was the one trying to defend the sniper course, right? And I said, guys, we need to stick to sniper course, and we need to make people understand the sniper course is not only the lessons, because around at that time I became a mentor. Other people were doing microstructure as well, like Chris and Fafa and Racing, and other people was doing microstructure. It's like, guys, I know microstructure, I use microstructure, but here in school we need to stay to the policy, right? People came here for Sheldon. We cannot come up here with different styles here and confuse people. And the answer that I got, oh no, no, everyone has his own style. Why not? I don't see why not people doing other stuff like that. I said, okay, I was almost told off. I said, okay, no worries. And then I started doing microstructure, right? Like 5 weeks later, we got a meeting. Guys, we need to do Sheldon, Sheldon cause. We need to support it, right? And we don't need to confuse people. And I was like, hello? You know, 2 months ago, I said that, and everybody was like, "Yeah, yeah, it's all right, no problem." And now you are telling me off. But anyway, yeah, okay. So, yeah, I'll make sure first of all that you know exactly how to do not sniper, because we are not in a sniper club, right? We are the Wells. So, I'll make sure that you know exactly how you do the well approach. And these twins that I promoted here with you today is one of the aspects of the wells, and especially on the larger time. Not so much about the twins, guys, right? I put out the twins, it's fine. You can use it, no problem. But in the end of the day, what a well does, he doesn't look at the 15-minute. Right. That's what I want to get into you. I don't want you to think always like 15-minute. Can we trade a 15-minute? Yes, there are strategies out there we can do. Market structure, trend lines, stochastic RSIs, you name it. We can do that 15-minute. But in the end of the day, this is not what whales do. Whales make sure that they get in where where the water is very calm and is the bottom of the market, and then go in. And that's it. I grab my seat, and I'm not going to move from here when the show is end. When the show is going to finish. So the show is going to finish when the bull run is going to finish, right? And this is the time for them to get out. So they got the best seat, right? They got to the sweet spot of the theater, and then just sit there and say, I got here first. This is how we need to act. We don't want us to be the last one into the theater and trying to push through into the crowd and trying to grab a seat. And guess what? You're going to be on the last one. You're going to be sitting on the seats that no one wants to sit, right? So it's not going to be a good one. So we need to think like the whales. We're going to act like the whales for us to be like the whales. So we need to look at the larger time frame. That's why today I introduced you the monthly, the weekly, the 3 days, because I want you to get used to that, right? Stochastic RSIs is an aid, is a help for you to say, oh, okay, I see now the larger time frames. Where do I get in? Okay, you got some extra help here. Look at that. This is on the daily, and that was the optimal spot. Both of them are the very bottom. Every now and then you get other extra opportunities, right? But here, when it's very top and it's telling you, you know what, it's overextended. This is not the time for you to buy right now, because you are towards the end of the movie, right? You are towards, into the commercial break. You need to catch the whole thing from the beginning. So the larger time frame will give you that opportunity. Yes, sir. I believe so too. It is very important for us to get in, on the beginning of the movie and to get into the best spot ever. Okay. Okay. Maybe tomorrow we'll speak about market structure. Why not? Why not? I don't want to upset anyone. I'll do, we are together here as a family, right? We're family. We're friends. So, if you want to talk about market structure, we can do. There's no problem. You want me to increase my volume? All right, okay. Do I sound better now? All right. Can you talk about the market makers? Well, market makers, very briefly, because I'm going towards the end of the show. I need to keep it under 2 hours here strictly. So I've got another 10 minutes. So market makers are not the bad people, right? Because a lot of people think that the market makers are the bad people. They're not the bad people. They are the people that we need to thank them in a way. And it's like very contradicting now how we feel about the market makers, but how we should look at the market makers. The market makers are the ones that they're making sure that the market is moving, right? Without them, the market doesn't move. And if the market doesn't move, it's flat, it's dead. And then there's no interest for us. If there's no movement, then we can't make any gains. We can't make any money. So market makers are the ones responsible to make sure that the recordings are going to be uploaded in Discord in the war room, and there's a section on the left that says, where is it? Let me bring that up here. Here we are. It should be here on the Zoom recordings under the announcements on the far left, right? Zoom recordings. So the market makers are making sure that they move the market, right? They're making sure that the prices are going up and down. They're making sure that the brokers inside the exchanges are using the assets, and they're making sure that the people, move the market, they buy and selling things. So it's very important. They have a very important job. Now, in the year 2023, and now we're going towards 2024, the traditional markets that don't rely, for many decades now, they don't rely only on human factor, because it's very manipulative, right? So if I was a market maker in Athens, I can make a phone call to the market maker in Italy, and I say, hey, you know what? Today I'm feeling very good about this token or this asset or this stock, whatever. And I can manipulate other exchanges as well for the favor of myself or the favor of my clients. Right? So nothing wrong. This is how the traditional market was working anyway for many, many years now. But it's too many assets out there and not enough people, market makers, to deal with it. Right? So they got the computers, got the systems, the algorithms. And we got the computers monitoring the buying and the selling. And also, in this last decade or so, the market has been more accessible to the retailers, right? For you to get into the stock market, for you to trade, you should have a large amount of money, and you need to find a broker because you don't have the license to get into the market for you to buy and sell. So back then, you needed to find a broker that had a license to get access to the stocks that you're interested to buy and sell. And obviously, you knew nothing because there was no information outside of the exchange. So you knew nothing about stocks. You had no idea if there was a Tesla or a Microsoft or Amazon or any stock out there, Coca-Cola, Pepsi, well, you name it. You had no idea what they're doing. You had no access. You have to wait for the newspaper to come out the next day to tell you how the stocks were doing the previous day, right? It was always too late, not real time. And only the brokers had some access to it. Nowadays, it's different. Now we got all these exchanges and all these retailers now, they don't need license, right? You need to sign up into Binance, that Binance has the broker license. They get all the assets for you. And now things have become way, way faster. So when we had a few million people messing around with the stocks and the markets and any kind of markets, now you got millions of people, right? Millions and millions on each exchange. So there's no enough people to run this business as market makers. So they rely on computers, right? So 80% of the market is being run by computers. They're monitoring the buying and the selling and the price, the demand and the supply, right? So they're all linked together and to see, how much they have in supply, how much is left, how much they bought. Algo trading. Yeah, I mean, it's like a giant computers, right? They have their own algo to do their own calculations for them to print the prices, right? And yeah, they have too many factors to calculate to come up with. So yes, I mean, we've got still 20% remaining out there. Market makers are human beings, right? But majority of them is the PCs and the computers. So we have to no trick, but we need to fight and win the game with the computers. And the only way for us to do that is time. I'll tell you why. I mean, I'm not an IT expert, but I did study IT, right? And you can understand this by the indicators as well. You don't need to be an expert. If I open up now the indicator here, the stochastic RSI, it's got some fixed values. K and D is 3, RSI length and stochastic RSI length is 14. These are the static values that the formula has to need the calculations. If I change these numbers to any random, let's say 5, 5, and 20, right, you see the RSI is changing. Let me do these 50, and then let's do this 50, and then let's do 5 or 2, whatever. You see stochastic RSI is giving you different values. So you see, you can change, you can alter the configuration, and it's going to give you different results. Now, the algos out there, it's exactly the same thing. They got fixed values that they need to monitor on a fixed time scale. So they can see what happened the past 15 days or 10 days. They cannot calculate prior that. So what is my advantage here against the computers? They always calculate the last 50 periods. Let's say I put here 50. So it has to calculate what happens the last 50 periods from now. Tomorrow, it's going to calculate the last 50 periods from tomorrow. So the last field from today, which is number 50 today, tomorrow is not going to be part of the tomorrow's calculation, because tomorrow, the 50 slot, the today 50 slot, tomorrow is going to be the 51. So it's going to be out of the scope. The day after, it's going to lose the other slot. So it's like, let me do this very quickly. Let me demonstrate it that way. So you got like five cycles here. And let's say the indicator, it needs to calculate these 5 cycles, right? The next day, a new cycle is going to come. So the indicator is going to run the last 5. So that is out of the question now. The day after, right, it's going to calculate the next new 5. So these 2 now are out. This is how computers are running, the algos, and how the computers are doing the calculations. So they are very limited with time on the calculation, on the length of the data they are calculating. So how can I trick the market? For me to go way back and see what is going on. Right now, the algo is very busy with these levels. It ignores that level. That's done is history. That's done is history. That's done is history. Well, I got my trend line. It's not history to me. It's my TA. So the only way for me to beat the computers is for me to take data way, way back than the computers. And this is the only way I can't beat them. And I say, okay, you know what? You are very busy with this. I'm using the indicators. Let me close that indicator, or let me go back to settings and go to default. Default here, reset settings, bloom. Right, here we are. And let me take it to the chart. Here we are, chart. Okay, boom. So I'm using this indicator right? The algo is busy here, but I'm using all these indicators here to go all the way back in history and see what's going on. And the larger the time frame, the more aggressive is my attack against the market, right? Now, the algo, there's nothing it can do about these levels, but I can. I can see the indicator here is telling me, you know what, we reached the very top. This is a weekly. Look at that. We got a cross down on the weekly, right? Today's algo, there's nothing you can do about it. That indicator gave me the past 14 weeks. It's gone. The market makers are very busy right now on the 41K level. But this indicator tells me in history what's going on the weekly, and we've got to cross down. So, okay, this is time for me to take some profits and me to get out, right? Not completely. Don't lose. Never lose your good positions, your good entries. If you've got a good entry somewhere, don't lose it. Hold it. Give out some profits, like I need to book the profits. If you are on the exchange, it's telling you that you are on 200% profit. It is not yours until you close partial that trade and transfer that money into your account, right? So make sure you book your profits. And for you to do so, you're going to close a partial. Remember, when you are, when you're reaching above 100, grab your investment. You put some money in there and it's doing very well. It goes over 100%, grab that money back. And then let that trade go free. So listen, you know that? I got my money back and I got a trade open. And then that 100, that money that you use on the first investment, you're going to open another trade. And when that trade is doing very good, grab that money back and say, listen, I still got my initial money saved in my hand. And now I own 2 trades are open and they're doing very well. And in the end of the bull market, you're going to close them all and say, listen, I started with 1,000 and I end up with 10,000. I think I've done very well. Right? So, ladies and gentlemen, I'm just above 2 hours. I'm going to close that down. When Zoom is going to be finishing with encoding this video, I'm going to post the link on the Zoom section on the Discord, so you can see that again and again and again, so you can hear my voice. Here you are. So I'll see you all tomorrow morning, right? Until then, be safe, monitor these, right? Go to the daily and monitor these levels and see what's going to happen, right? Let's have a look at this RSI. It's getting closer and closer to this line. Okay. Let's see what's going to happen tonight. Let's see what's going to happen tomorrow, right? And I'll see you all around in the war room, right? Until then, let's have fun. Be safe out there. I don't want you to be surprised. You got the indicators, right? We keep on saying that we need a pullback. We need a pullback. That was overextended. Maybe this is the beginning of the pullback. It is not a bad thing, right? And we're going to see what's going to happen. Okay? Until then, I'll see you all tomorrow. Take care.